Welcome to the realm of real estate and investment, where we dive into the intriguing world of Medical Properties Trust. This trust, also known as MPW, is currently trading at what some might consider depressed multiples, a situation that has sparked quite a bit of conversation in the investment community. But what does this actually mean? Simply put, the multiples we're talking about are financial metrics used to value companies. When we say these multiples are depressed, we mean they're lower than what might be expected for a company of MPW's standing. This could potentially make the trust an attractive target for a takeover, as investors are always on the lookout for undervalued opportunities. However, it's important to note that there are fundamental issues that may justify MPW's low valuation. For instance, while the net book value of the company, that's the company's total assets minus its total liabilities, is higher than its current market value, there are concerns about the true value of these assets. These assets include stakes in real estate joint ventures and other operating entities that MPW holds. Then there's also the issue of MPW financing struggling tenants, a move that some might argue isn't the best use of its financial resources. Adding to these concerns are allegations of malpractice from short sellers and the company's exposure to tenants who are in financial hot water. All these factors raise doubts about the true value of MPW's assets. Moreover, it's worth noting that the market value of MPW's properties may be lower than what is reported on its balance sheet. This discrepancy can be due to a variety of reasons, including market fluctuations and regulatory restrictions. With these financial dynamics at play, it's no surprise that whispers of a potential takeover are floating around. However, the path of potential takeover is not without its obstacles. As we delve deeper, it becomes evident that there are several challenging factors that could potentially deter prospective buyers. The true value of Medical Properties Trust's assets, including its stakes in real estate joint ventures and other operating entities, is a major concern. While the net book value is higher than its market value, serious doubts loom over the actual worth of these assets. This discrepancy between book and market value can create uncertainty for potential investors. Next, let's look at the company's financial commitments. Medical Properties Trust has been financing struggling tenants, a strategy that may not always be the best use of its financial resources. This approach is a double-edged sword. On one hand, it can help maintain occupancy rates and secure rental income. On the other hand, it can put the company at risk if these tenants fail to recover financially. Then we have the allegations of malpractice that have been leveled against the company. These claims, whether substantiated or not, can tarnish the company's reputation and make it less appealing to potential buyers. It's important to remember that in the world of business, perception can often hold as much weight as reality. Adding to these challenges is the company's exposure to financially struggling tenants. The transfer of healthcare facilities is highly regulated, which makes it difficult to find replacement tenants if a current tenant goes bankrupt. This increased risk can be a significant deterrent for potential investors, even those with a high-risk appetite. In conclusion, while Medical Properties Trust's low market value compared to its book value might make it seem like an attractive takeover target, these challenging factors raise questions about its actual worth. These factors raise questions and contribute to the low market value of Medical Properties Trust, making it an interesting takeover target. The world of healthcare facilities is a complex one, heavily regulated and fraught with potential pitfalls. The transfer of these facilities, for instance, is under stringent control. This is a key consideration for potential takeovers, as it dictates the ease or difficulty of finding replacement tenants should a current tenant face bankruptcy. Regulations aim to ensure the quality and safety of healthcare services, but they can also form significant barriers to entry and operation. They touch every aspect of the healthcare real estate business, from the physical infrastructure and equipment to the licensing and qualifications of the personnel involved. Additionally, there's the issue of financial regulation. The financial health of tenants is closely scrutinized, and any signs of instability can lead to increased regulatory scrutiny. This is a significant challenge, as the financial struggles of tenants can directly impact the value of the property trust. Furthermore, the regulatory environment is not static. It evolves continuously, influenced by policy changes, technological advancements, and societal needs. This means any potential takeover must factor in not just the present regulatory landscape, but also anticipate potential future changes. These regulatory hurdles add another layer of complexity to the potential takeover of Medical Properties Trust. So, is Medical Properties Trust a potential takeover target? Let's consider the facts. The trust is currently trading at depressed multiples, which some might view as an attractive opportunity. However, there's a catch. The trust has been financing struggling tenants, which may not necessarily be the best use of its financial resources. Moreover, there are key concerns about the true value of its assets, including its stakes in real estate joint ventures and other operating entities. The company's net book value is higher than its market value, which raises doubts about the real worth of its assets. And let's not forget the regulatory hurdles. The transfer of healthcare facilities is heavily regulated, making it difficult to find replacement tenants if a current one goes bankrupt. All these factors contribute to Medical Properties Trust's low market value compared to its book value. So while the potential is there, the path is fraught with challenges, from financial dynamics to regulatory hurdles. Remember, in the world of investments, nothing is black and white. It's all about the gray areas and the ability to navigate them that determines success. While the potential is there, the path is fraught with challenges. Only time will tell if this trust becomes a target. The world of real estate investment is ever evolving. It's a dynamic landscape, filled with opportunities and challenges that demand our attention and keen understanding. It's a game of strategy, where knowledge is power, and staying informed is the key to making sound decisions. So, let's continue this journey together. Let's delve deeper into the complexities of the market, dissect the trends, and unlock the potential of strategic investments. Stay ahead of the curve by subscribing to our channel for more insightful content like this. Stay savvy, investors.